Hey everybody, Sam Kwok here with one of the Kwok Brothers. Now, just when we thought that the housing market can't get any crazier,
that's crazy.
It's about to get crazier. It is revealed that Biden just fired the director of Federal Housing Finance Agency, FHFA, which is an agency that was created back in 2008 at the wake of the financial meltdown of 2008, and it was also an act of which the government basically took over Fannie Mae and Freddie Mac. And even more of a further backstory, Fannie Mae and Freddie Mac were once private companies responsible in making sure that mortgages were being securitized properly and smoothly. Like most government agency, the FHFA also has a director in making sure that the federal government has a role in protecting the financing programs, especially overseeing the activities of Fannie Mae and Freddie Mac. Now, the reason why this is so important to understand is that most mortgages that gets originated today by your local banks and mortgage brokers are being backed by the federal government, which of course the FHFA has a huge saying and also responsibility in. Now, Biden firing the current director of FHFA, which was appointed by Trump, shows that Biden is up to something as far as new ideas and proposals, as far as how federal government will play a role in providing financing, as well as introducing new programs for affordability. And a lot of the ideas and proposals that are already on table sounds a lot like 2005 and 2006. What? But at the same time, I'll explain why exactly it's not. Now, back in 2019, when Trump appointed, now fired director of the FHFA, the goal, well, at least the rumor says, FHFA was planning on taking Fannie Mae and Freddie Mac out of the government control and back to the private hands. So essentially undoing what the government did to take over Fannie Mae and Freddie Mac in 2008. Therefore, making Fannie Mae and Freddie Mac back to being independent from any political ties and government ties as far as making decisions. But on the other hand, which are oftentimes supported by the Biden administration, is that taking Fannie Mae and Freddie Mac out of the government's picture means that less and less mortgages would be backed by the federal government, which could translate into an imposed risk for the lenders making these mortgages and originating these loans. So what did change after 2008 when the government basically took control of Fannie Mae and Freddie Mac was that banks and mortgage lenders now could issue loans and create mortgages knowing that the government is going to back them up. Therefore, the inherent risk goes down and the banks could follow a set guidelines set by the federal government in exchange for lower fees, lower interest rates, as well as cheaper costs as far as issuing these mortgages. So one of the main reasons why I believe that Biden fired the director of FHFA could have been the fact that Biden did not want to see FHFA reprivatizing Fannie Mae and Freddie Mac, which in Biden's administration's eyes and perspective could increase the cost and the fees and interest rates on these mortgages now that the government isn't backing a lot of these mortgages and programs. However, my personal thought is that if Fannie Mae and Freddie Mac were to get reprivatized and could compete with the other markets and enterprises and companies, by nature of free market and competition, we will see better quality products, better quality mortgages, better quality loan programs, and because of the competitive pressure, the cost of mortgages as well as origination fees, interest rates, could go down as more competition is added to the playing field. So reprivatizing Fannie Mae and Freddie Mac could mean that these two companies will now have to compete with the free market and the public to keep the costs down low and create better products and make sure that they're on par in terms of performance and no longer having government control, which almost would have been like a monopoly situation. Wait, that sounds a lot like what my cousin Kim Jong-un did with his banking and loan programs in North Korea. So now that Biden fired the director of FHFA, now the chance of reprivatizing Fannie Mae and Freddie Mac is pretty much out the window. And here's what Biden is thinking right now, or proposing, at least the ideas as far as what he's planning to do with FHFA and some of the new programs he wants to introduce. Which, by the way, the goal is to make housing more affordable, which I'm a huge fan of, but I don't necessarily think that is the issue at hand right now. So let me first describe what Biden is planning on doing. With FHFA, he wants to introduce new programs, of course, through his new appointed director, which, by the way, there isn't a new director just yet. The permanent directorship right now is still vacant. So one of the things that Biden wants to do is introduce what's called a low-income refinancing program, which allows low-income communities to refinance into cheaper interest rates, which, by the way, I'm a huge fan of that because we do need to give everyone an equal shot at cheaper rates and making sure that they get into better mortgage programs. But this is where it gets into a little bit more of a slippery slope as far as what Biden wants to do. Now, Biden's proposal is give Fannie Mae and Freddie Mac free reign to mortgage purchases with lower credit scores. So that means that right now, FHA loans, VA loans, any government-backed mortgages, Fannie Mae and Freddie Mac could set a new guideline under Biden's direction to basically allow borrowers with ultra-low credit scores to also get a chance at getting loans and mortgages as well to buy homes. On top of that, Biden's proposal through Fannie Mae and Freddie Mac is to allow private lenders and mortgage companies to basically issue loans and mortgages to individuals that have high debt-to-income ratios. Now, to remind you guys what debt-to-income ratio does or what debt-to-income ratio is, so essentially what the banks would do is they'll take your credit report and look at all your outstanding balances as well as how much you pay on those debts and divide that by your income. So let's say you make $5,000 a month in income, and let's say your total debt payment and also your rent, combining your rent, is about $2,500. So that would mean that you would have 50% debt-to-income ratio, and many times banks typically want you to have less than 42 or 40% debt-to-income ratio to qualify for mortgages, home equity loans, and so on. But what Biden may propose is instead of banks looking at individuals with 40% or less in debt-to-income ratio, Biden may say, hey, listen, we'll even back loans that are 50 or 55% debt-to-income ratio to allow more people to get mortgages and to buy homes. Now, what that ultimately does to the housing market is now we just expanded the buyer's pool. There's more demand, more buyers in the market right now wanting to buy homes, which inherently will increase the price even more, which leads me to the thought that the rise of price in the housing market has no end in sight. Now, in our last video, Biden is already making moves to eliminate the 1% rule as far as how student loan is calculated for the debt-to-income ratio. Now, Biden wants to introduce new programs through Fannie Mae and Freddie Mac that would essentially allow more borrowers with lower credit scores and higher debt-to-income ratio to get a chance at borrowing and getting mortgages to buy homes. So I don't know how you guys feel about this. Go and comment down below. Is this basically a repeat of 2005 and 2006? Is this going to keep on causing the housing market to go up and prices increase? I don't know. What do you guys think? So go and comment down below. We'll love to have a conversation with you guys. As you may notice, I do comment and I do notice comments down below. So definitely go in and leave your comments and thoughts down below. So here's my ultimate thought and opinion about all the changes and programs that are being proposed right now, which by the way, some of the programs do sound great, such as allowing refinancing for low-income communities. And there's even proposals on boosting investments to create more multifamily, to create more housing units, which is great, which leads to this very thought that we don't have an affordability crisis for the sake of affordability crisis. We have an inventory crisis. If you guys notice some of the charts and data that we showed in the last video, we have a massive inventory issue right now where we're at historically low listings, historically low housing units. We have 5.5 million housing units that are in shortage right now in major areas such as Los Angeles, Chicago, and New York. And yes, I do believe that we do have an affordability crisis and we do need to allow more people to be able to afford homes. But I don't necessarily think some of these programs that are being introduced and proposals that are being laid down are necessarily the right solutions to go about it. So ultimately, I believe the solution to the affordable housing crisis is to allow more builders, more investors, more developers to build more homes, to build more apartments, to build more housing units for the economy. Because it's not necessarily about having bigger or better financing programs, it's about making sure that there's enough supply to meet the demand, which by the way, in the last 10 and 15 years, we haven't been building as much home as needed to make sure we meet the demands for the future. So as always, I believe that the government should get out of the way, peel back the regulations that hamper developments and new projects. We need to allow these developers and investors to do what they do best by building more homes. One of the classic examples is California, where there's a lot of regulations, a lot of red tape, there's a lot of paperwork that any developer has to do, and by the time they're ready to build, they might be thousands of dollars or even millions of dollars in just to pay the fees to get the permit and all the drawings and the engineering plans just to get ready to start building. So I believe the key is to get the government out of the way to allow the investors and developers to build more homes, that way injecting more supply into the market and ultimately cooling down the prices to where more people can afford the homes. So bottom line, proposals like these that only bring more buyers and demands to the market doesn't necessarily help and solve the underlying problem, and that is the supply issue. We need to build more homes. We need more investment dollars. We need more developments happening at a cheaper cost and allowing developers to act quickly instead of sitting around and dealing with red tape. So if these proposals and ideas do get passed and do go through, that means more banks and more credit unions, more mortgage brokers could issue loans to borrowers with lower credit scores, higher debt-to-income ratios, and they're likely to be distressed if any financial instability were to happen with these borrowers in the future. Sounds awfully lot like some of these subprime mortgage products we saw back in 2005 and 2006. So guys, go and catch some of the other housing market videos and reports that we do. Again, we do a lot of data, we do a lot of research, and I will leave all my show notes as well as my research down below where you can go and investigate and check this out yourself, because you should never trust a random Asian guy on YouTube. We always try to base our opinions based on facts, and we'll give you guys raw data so that you guys can go and formulate your own opinion as well as decisions as far as the data that we present. So go and definitely check out the other videos, and we'll see you guys in the next video.